Texas Pacific Land TPL just announced a new data center partnership. In this video, I will explain the situation, what just happened, the piece of news that was recently released. The stock is up 7% when the AI trade is falling behind today. So pretty interesting move because a lot of things are happening for TPL. In this video, I want to mention what the deal is about, if this is important or not. And I want to talk about the financials for TPL. And after this, I think we will go through some earnings calls commentaries to cross-read the different things at the same time, and we'll play around with the valuation so you will know at what price I'm buying TPL. So plenty of things happening in this video. I hope you will like it. In case this is your first video from this channel, welcome. My name is Christophe Noor. I'm French. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. Thanks to TPL, by the way, because I bought the stock in 2020 and I sold at the absolute top. I can show you the chart, what it looks like. I bought the stock in October, November 2020 at $150, and I sold at the absolute top at 1,600 or 650, something like this. And I made a video in the past saying I sold because of valuation concerns. I think the stock has become expensive, and guess what? It's been more than 1 year now, and the stock has only gone down and down and down and down. But the business is still fine. The business is still doing more deals. So what is happening there? Okay, so in case you don't know TPL, it's a company in the royalty business. They have roughly 900,000 acres of lands in Texas, and it turns out you have oil on these lands. So if people want to drill oil, they have to pay a royalty stream, a royalty to TPL. And they also have a water operation. So they are in the produce water department. They are selling water, managing water, and they do everything with a very high margin profile. The gross margins are at 87%, the operating margin 75%, and the net margins are at 60%. So very, very, very profitable. This is a business that is growing almost every year without any debt for the moment, and they are doing a little bit of buybacks, a little bit of dividends. Anyway. And the stock has been going down because, as I told you, it's an oil play and oil prices went down. So this is the price of oil since 1 year, 2 years. I mean, you can check all the metrics for oil. Oil has been trending down, and we are back to the same prices we saw in 2021. So if oil prices are going down, the revenue for TPL should be going down, right? So and actually, you can see a deceleration in the revenue for TPL. Okay, fair enough. The revenue increased meaningfully in 2022 when oil prices were high, and then went nowhere, increasing a little bit because of more volume. People drill more. And over the past couple of months, the management team has been talking more and more about data centers. Okay, so TPL is slowly transforming itself from being an oil royalty company to being an oil plus water royalty company to being a oil plus water plus energy data centers company. Okay, and this is all asset light. And guess what? America has one of the best lands in the world. Texas, the Permian Basin, is a very, very large area with very low cost electricity, a big amount of land, and you can do everything on this land. This is the perfect hedge for inflation. And if you check what the management said in Q3 2025, there was a question about data centers. Are you seeing more projects when it comes to data centers? Okay, maybe just for a second question on the power side of things, just power data center type of conversations that are occurring. How do you all feel about your position in terms of being able to participate out in West Texas versus say a quarter ago or even the start of the year to capture some share of this market? Just given the expensiveness of your footprint, okay, what are your deals when it comes to data centers? Here is what the management says. Look, we feel like TPL is very well positioned. We have all of the attributes needed to be very attractive to power generators and data centers developers, hyperscalers. I think we are probably got more available land with those attributes needed than anyone else in West Texas. This is true. If you check all the companies in West Texas, TPL is maybe the biggest company over there that is public. You have another smaller company called Landbridge. Full disclosure, I'm a shareholder of Landbridge. It's like 5% of my portfolio right now. And Landbridge is mostly focused on water and data centers. Okay, not oil at all. So you have slight differences between these two businesses. TPL has more lands. TPL has 900,000 acres of land. Landbridge has roughly 300,000 acres of land. So TPL is 3 times bigger than Landbridge. I think West Texas is quickly becoming more and more popular as an area to build out multi-gig facilities and campuses. Would just say that we continue to have really good conversations. I think we're pretty close on a couple of opportunities that are interesting. Hopefully, we'll have additional news to share here in the very near future. And the report was... What was the date of the report? Okay, blah, blah, blah. Pretty excited, blah, blah, blah. The report was a couple of weeks ago, November 6th, and we are December 18 as I'm recording this video. And yesterday, December 17, so 1 month after this, we had this announcement. Bolt and TPL announced a strategic agreement to pursue data center development in West Texas. Seems like the management is walking the talk. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Seems like they said an announcement would be coming in a few weeks. Well, it's happening. So, what just happened? You had an agreement between TPL and Bolt Data and Energy Company to develop and enable large-scale data center campuses and supporting infrastructure across TPL land. Bolt is a data and energy infrastructure company co-founded by Eric Schmidt, the former CEO and chairman of Google. So I think he has also been the president of Google. Maybe he left as a president in 2017 or something like this. Anyway, he was the CEO of Google in 2004, 2005 for some years, and then became the president. So he has some deep knowledge when it comes to data centers and energy. And actually, you can check on Twitter what he has to say because he is very bullish on energy. Look at this. Eric Schmidt, the US might run out of energy for AI data centers by 2028. I mean, when Mr. Schmidt is speaking, we all listen. Generally, it's been of very good advice to follow what he's saying. Okay, here is my attempt to solve this problem. We are just getting started. Well, it seems like the thesis of having data centers in Texas is getting more traction. And as you can see from the stock price of TPL and also Landbridge, people are doubting that data centers are coming in Texas. But if you follow Eric Schmidt, or if you know another fund called Horizon Kinetics, you have a few people in the world sharing their knowledge, saying that Texas is actually a very good place to welcome data centers. Now you have a huge backlog for North Virginia. You can't build a lot of data centers over there. Google just had a partnership with, I think, Malaysia to create data centers a little bit everywhere. You have a lot of data centers that are in project in Texas. Okay, now the industry might be booming, and apparently this is just getting started. Eric and Horizon Kinetics are sharing this view. So I highly recommend you read what this fund, Horizon Kinetics, is saying publicly about Texas and potential data centers. Because now we are at the very early innings. What will happen in 10 years? Do you want to be invested in this future in the next 10 years? What if it turns out okay? What if TPL turns out to be a hub for data centers and it's accretive to margin, etc., etc.? What if the other company, Landbridge, succeeds? I think if they succeed, it's a 10x. So this is the reason I am invested in Landbridge. The upside is just phenomenal. If they fail, they still have some royalty businesses like oil for TPL or water for Landbridge. But if they succeed, it's a 10x. Okay, quote, our goal is to create the largest and most efficient data center company in the world by combining abundant energy production, efficient and scalable data infrastructure, and the largest land expansion runway in North America. By partnering with TPL, Bolt will fuel the fourth industrial revolution and protect and augment American leadership in AI. So, Bolt raised $150 million and TPL is invested in Bolt. TPL invested $50 million in Bolt. So they have equity, which means they have incentives to make it work. TPL will also receive an equity interest, warrants, and right of first refusal to supply water to Bolt affiliated projects. Blah, blah, blah. You have some hedges. Bolt is focused on shortening the time between demand and delivery for compute at scale. Significant step forward. They are very bullish, etc., etc. So plenty of bullish things that were mentioned for TPL in the past, for earnings calls in the past, but also Landbridge. So what is great, because I'm a shareholder of Landbridge, is I can cross-read what everybody is saying in this industry. And I only see green flags. So you clicked on this video, the title of the video should be like, data centers are coming. Actually, you have another piece of news, they are coming. Every month you have a new piece of news saying, yeah, getting there. Yeah, data centers are coming. We don't know exactly when. People are in a hurry. They want data centers to be here in 6 months. Come on, guys. You need to build the ecosystem, to build the infrastructure first, the water first, the energy partnerships, to attract potential data center players. You need some deals, so it will take some years. But every month, we have another green flag, bullish momentum. So here is what Leo Nellison is saying on X. Please follow him if you want to know more about TPL and Landbridge. It's a great account to follow. Texas Pacific Landbridge. Think about it. TPL is getting equity in the new company, the right to supply water, and becoming a land partner for natural gas, renewables, and eventually nuclear. It also confirms the Landbridge thesis, which is that Permian land is ultra valuable in the data center build-out. For many quarters, both TPL and Landbridge have been laying the groundwork, including renewable deals. Yeah, exactly. With Landbridge, they just signed a deal with Energy, the big energy company. Projects with IPPs, etc. The problem is that it takes time. Years. For now, the market keeps treating TPL and Landbridge as simply oil and gas royalty stocks. It sucks, but I'm fine with it as I can buy more. TPL is misunderstood. I can tell you with a lot of conviction that nobody really understands TPL. Landbridge is even more misunderstood. People don't know what Landbridge is, what Landbridge does, which gives me an edge as an investor. And I love it. I love that you have very few videos on Landbridge and TPL. I love that when you type TPL on YouTube, maybe I will be the first one or the second one on YouTube. You will see my big face in the thumbnail. I love it. People don't cover these companies much, which means nobody can really price them. Nobody understands all the things happening at the same time, all the moving parts. People think it was a deal at 1,500. People thought it was a deal. They don't know how to value Landbridge. They don't know how to value TPL. They don't know all the growth opportunities and the levers. I think TPL, better than Landbridge. TPL is a better hedge against inflation. I think it's a better business model. I think the track record speaks for itself. And I think they have a lot of optionality on their lands. Meaning now you have a few decades of oil reserves. So the oil business is fine. After this, you have water, the water business that was created in 2016, 2017 with a little bit of capex. Firing on all cylinders right now. What if they pull this out and they create a new revenue stream for energy data centers. How it will work is TPL will get paid every time something is built on their lands. First revenue stream. Secondly, TPL will get paid every time a road will be built, a bridge will be built, a new facility will be built, and a new data center deal that will happen. And every time you will generate electricity based on this energy deal, TPL will get a fee from the spread. Additionally, you have pre-contractual agreements, how do you say it? Not leases, but fixed amounts that are given to TPL every time you want to build something. 3 revenue stream. Additionally, you have all the ecosystem and the take rate that TPL will have, which means a 4th, actually. So plenty of new revenue streams that will come for TPL. Every time electricity will be produced, every time something will be created, every time a new bridge will be built, every time a new facility will be built, every time they want to use some water, every time they want to sell some lands to some private companies, you have plenty of optionality for TPL, which means is TPL really expensive right now? Maybe this is the reason you clicked on this video. So let us go to the valuation. Yes, we believe, let me see if I finish for X, for Twitter. We believe West Texas is the best, etc., etc. Okay, so let me remove this, Oil, I showed you that the revenue for TPL is still going up despite lower oil prices. That begs the question, what if oil prices go up in 2026? You will have more volume, more pricing. If oil prices go up in 2026, the revenue will skyrocket for TPL. Skyrocket, which means the guidance is wrong. What are the estimates of revenue for TPL coming from Wall Street? Wall Street expects the revenue to grow 15% in 2026 and 10% in 2027. What if they do more than this? About the earnings per share, they expect earnings per share growth of 16% and 8%. Yeah, zero visibility. And if you look at the valuation for TPL, what do we have? The stock is about to do a split, a 3-for-1 split, which I hate to see actually. But the governance has always been an issue with this company. So anyway, let me not comment on this one. TPL will have a split, a 3-for-1 split. So the stock price, I don't know, in 10 days will not be $900, it will be $300. And if you are a shareholder, instead of having 1 share, you will get 3 shares, okay? And so the PE ratio is wrong for this one. And the price to free cash flow is also wrong for fiscally high. They are already preempting this. Fair enough. The price to free cash flow, oh, now it's working properly. Anyway, the price to free cash flow for TPL right now is 42. The forward price to free cash flow is 32. Is it cheap or not? Given Wall Street will be wrong. In case oil prices go up, Wall Street is wrong. In case oil prices go up, the revenue will not go up by 15%, but by more than 20%. So maybe the forward price to free cash flow, the real forward price to free cash flow, is not 32. It's a little bit lower than this. If oil prices go up. If oil prices stay down, well, the valuation is okay. I think TPL has a lot of potential in the future, but I still think it's expensive right now, actually. If you look at the price to free cash flow over time, I bought the stock when it was trading very cheaply. I bought the stock 2 times, actually. I bought the stock, can't I see this? Let's say December 2020, I bought a little bit lower than this. I bought the stock with the price to free cash flow of 28. Not forward, right? Trailing. And then I bought a second time in June or July with the price to free cash flow of, let's say, 25, 26. Now it's 42. I think TPL will grow more than what Wall Street thinks. So let's use stock unlock and the DCF and you will understand my valuation. By the way, you see me navigating between Fiscal AI here and stock unlock here. You can use affiliate links. I have links in my description, like discount codes. If you click on these links and register, it will be 15% cheaper for you. So in case you are not a user, you are wasting your time. And if you want to be a user, use my links. It's literally cheaper. Okay, what will be the growth rates for TPL? I will not use free cash flow because the free cash flow on stock unlock is wrong because they did some acquisitions. And TPL is a tricky company, so sometimes financial websites have it wrong. Anyway, let's forecast the net income over time. This has been a net income over time. You discover much more volume and fracking, etc., etc. If you think the net income of the company is going to grow at 10% per year for the next 5 years, let's start with 10%. If you think they will not dilute shareholders, not do dividends, and if you think they deserve a price to earnings of 25, if these are your assumptions, the stock is still expensive and you want to wait $500 to buy it. If you buy right now, you will make no returns. If you think the growth rates will be more than this, which I think will be the case, you can expect 15% growth rate of earnings for the next 5 years. If these are your estimates, the fair value is 666. So that's the devil valuation. And if you buy right now, you will expect a CAGR of 4%, which is not good, frankly, which is not good. After this, if you want to play around with the valuation, if you think this is a premium business that will grow at a premium valuation and you think it deserves a price to earnings of 30, if these are your assumptions, then the fair value of TPL is $795. And if you buy right now, today, you can expect a CAGR of 7 or 8%. Next question for you. Do you want 7 or 8% per year? Or maybe do you want to wait a little bit lower? Because as you saw from this chart, the stock price of TPL is very volatile. The last time the stock went up 10% in one day, you wait 2 weeks and it went back down. So maybe now we are living in euphoria. People are reading the announcement and the stock is up 7% in one day. Maybe it will come back down. And actually, I would love to buy TPL, but not at these prices. So for people that commented, are you buying TPL right now after the announcement? The answer is no. What is my target price? Well, it's a little bit tricky because I want to be conservative in my numbers. The target price I have should be between this $660 and $800. And actually, I would prefer to buy it at $750, something like this. In case growth reaccelerates for some reasons, then I can understand why people are buying the stock right now. But I don't think it will. I don't think it's conservative enough to do this. I think this could be a good estimation of fair value, below $800. Has the stock gone below $800? No. Even on a 52 weeks basis? No. Just above $800. So I think I will start buying TPL when it drops at $750. I remember when I said this a couple of months ago, when the stock price was 1,000 and people were very doubtful of the stock price going down. People don't understand TPL at all. People are delusional for this stock for some reason. And it doesn't need much actually. A price of $750 is back to where we were in October 2024, 1 year ago. So everything can happen. As you see from this long-term chart, the stock is very volatile. Now the stock has become very expensive, and now we have the biggest drawdown ever for this company. I mean, if you start from a very high point, obviously it will be the biggest drawdown ever. Yeah, the stock is down 50% and people are crying. No, this is not the biggest drawdown ever. You had worse in the great financial crisis. you have worse, and here in 2020. Anyway, the stock got cut in half, but I want it to go lower so that I can start the position. So either the stock goes down and I'm a buyer at $750 and I will start the position several tranches, or the stock goes up and I will not buy it. This is fine because I already have Landbridge in my portfolio, so I am hedged. I have a 5% position in Landbridge, which I believe is cheaper than TPL and even more misunderstood. So actually, I'm fine in both scenarios. If it goes up, I will benefit because of Landbridge. If it goes down, I will increase the position in this Permian Basin trade and invest more in TPL. But right now, not a buyer. Below $800, we are speaking. And I think I will make a video when I'm buying TPL because I am very happy. I will be very happy to be a shareholder again. I will be extremely happy. TPL has been my best investment ever, you know. So I multiplied my money by 8 by investing in TPL. I bought it cheap and I sold it expensive. I know the business really well, and I think it's maybe the best business model on earth. It's just about valuation now and opportunities and alternatives, etc., etc. So if it drops, I am very happy to become a shareholder again, but not at these prices. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.